Okie dokie. We now have to close off all of our accounts. I'm just going to give a quick refresher of why we do this because it's easy. I think the thing about accounting is that it's very easy to see, oh, this is how you're doing accounting, like close off, but without understanding why we're doing it. And I think once you understand why we're doing it, it becomes much more straightforward. So what happens every year, you have your revenue and your expenses accounts, and you don't want to know, like let's say a business is 10 years old, you don't want to know the revenue and expenses of the last 10 years. You want everything to be done on a year-by-year basis. You want your revenues to be for that year alone, you want your expenses to be for that year alone. So to accommodate that, we do something called closing off the accounts. In other words, at the end of the period, we make all of our revenue and expense accounts zero. And that helps us figure out what the income is going to be for next year. So that's why we do something called closing off accounts. Does that rationale make sense? Okay. Let pen go. When it comes to closing off these accounts, there's a handy-dandy acronym we can use. I'm sure Evan's taught it to you, but you're going to want to memorize it. It's called READ. R for revenues. E for expenses. I for income summary, an account we're about to create. And D for draws or withdrawals. This is for Q4. So what you'll see when we do it, because we did our income statement and our closing off the accounts are pretty related to each other. We use almost 100% of the exact same accounts. So you can see here that we have everything already ticked off what we need to use. So the first thing we're going to be starting off with is our revenue accounts. And we need to make the balances zero. So let's just take a look here. Where's a sales account is a sales revenue. So it's $26,450 credit. How do we make that account balance zero?
We debit it.
We debit it to make for $26,450. So sales April 31st, 19.
30th. There's no 31st to me.
I'm gonna pretend I knew that. So sales, and we are going to be debiting $26,450 to make that balance zero. And what I'm going to do here when we do that is I'm going to go and just give a second tick mark to say we've done it. I don't see, we're going to talk about discounts and returns and allowances in 1 second here, but I don't see any other revenues accounts. Am I correct in saying that?
Yes.
Thank you. So the other thing that we have to deal with too, as we recall from our income statement, when we had the sales discounts, returns, and allowances here, we had these two called contra accounts held against sales. We need to close these off too. So we're going to, again, we notice that we have a $220 debit balance and a $1,980 debit balance for returns and allowances. So how do we make them zero? We credit them. So sales discounts. is going to be $220, and sales returns and allowances is going to be $1,980. And I'm just going to go ahead and at the same time tick them off again. And now we've closed off. We have $0 balance here, $0 balance here, 0 here. What's the account that we use? Because we have to have a balanced journal transaction. What's the account that we use to take care of the difference? Income summary. So I'm just going to make that. I wish I had a green crayon or something to show that it's a special account, but we're going to use blue. And what's the difference here?
That will be 24,200.
24,250. And I just want to point one thing out real quick. Our net sales, 24,250. It's exactly what we wrote down. So this is to close off revenue. Into income summary. I'm cheating a little with my lines. Okay, so we've closed off revenue accounts. Next in our little checklist, expenses. And once again, with all of these, we look at all of these expenses here, depreciation, insurance, and we notice they're all debit balances. So how do we make it 0? We credit it. That make sense? Okay. So we're going to have income summary here at the very top. We're going to come back to that income summary in just a second, but for now, I'll just write it down as a placeholder. So we have our, let's just start going down the list of everything we ticked off. Advertising expense. And that was for 780. We didn't have any charitable donations, so we're going to skip that. Computer supplies expense. That was for $2,100 here. And at this point, I'm just going to ask before I just write everything down and do it without announcing it out loud. Any questions about that? What I'm doing right now? Just going down my checklist of everything that I've done? Okay. So let me just check that off again, check that off again. And now I'm just going to go down the list. So this is going to take me a minute. Yeah, because we also want to zero that out. So that was an expense that we had. Because just remembering, like, and if we remember that rationale that we had before, that we don't want our cost of goods sold being carried over into next year, or we don't want 10 years worth of cost of goods sold. We only want it year by year by year. So we need to make that balance 0 every year. But you're correct to bring that out because it is a special account with special traits. I'm just going to zoom in here just to make this slightly easier to read. All right, so if somebody with a calculator could please add this up for me, I'd very much appreciate it. 264? Thank you. Okay, so that should be adding this up here. Theoretically, if we were to add up our total expenses at 28,185 plus our cost of goods sold 14,279, it should come to the exact same amount. Could somebody double check that for me?
It is.
Thank you. Okay, so we know our math is doing okay so far. Then we have to close off the income summary account, but before we do that, any questions about what we did here? I know it's just a lot of writing. I don't want to cramp anybody's hands. All right. Next, we have our income summary. So we made this account, we had $24,250 credit, and we had $42,464 debit. That means we have a net debit balance here. How much is that debit balance? Can somebody find a difference for me, please?
18,214.
18,214, okay. So we're going to do Aster Terrain Capital, and I'm going to just explain this here in 1 second. And we are going to credit the income summary account. And that was, can you repeat that number one more time, sorry?
It's 18,214.
Thank you.
14, sorry.
14, thank you. Okay. So this does two things. I'm just going to rewrite this. This does two things. The first that it does is it makes our income summary account 0. It's not an account that we use for anything else other than closing. So that has to be 0 too. The other thing it does is that when we debit Asset Train Capital $18,214, we saw here that we had a loss of $18,214 in the business. She lost money. So her capital, her investment in the business is reduced by $18,214 doing this. If she had a profit, we would actually switch these two around. But she has a loss, so we're doing it like this. Does that make sense? Okay. And that was to close income summary.
Okay, how did you get to the capital?
So the capital here,
Yeah.
it's just saying because we had $18,214 balance in our income summary account, it's just, and we took that much of a loss, is just reducing her account balance by $18,214.
I know, but how did you get back 18,000?
So that was just the, this $24,250 that we did in income summary with revenues, minus this, or the difference between that and this $42,464 that we got with the expenses. So whenever we do that, I'll actually include that math in here. That's a good call. That's 42,464 minus 24,250. I'll make that visible too. Okay. Any other question before we do the last entry? Okay. So now we have D for draws or withdrawals. And let's go take a look at the accounts here. We have Aster Terrain withdrawals. And she took out $1,800 during the year. So if she took out $1,800 during the year, that means she reduces her investment in the business by $1,800. She's taking out that money, so we need to reduce her capital account by that amount. So Aster Terrain capital and Aster Terrain withdrawals. So the capital here is being, again, reduced by $1,800, and we are crediting the withdrawals account. I just want to quickly show that here, that our withdrawals has a debit balance of $1,800, so we need to credit it to close it, to make it 0. And that reduces the balance of the capital account by $1,800. To close. The last thing I want to do here, actually, any questions about this transaction? Okay. Last thing I want to do before we take another 5 minutes here is, well, first I'm going to do my homework and or eat my vegetables and tick that off. And before we do our balance sheet here, you'll see ascertain capital. I'm just going to try and make this as clear as possible. Ascertain capital. At the start, it had $59,396, but as you can see, we lost some money and we took money out of the account. So that balance is no longer $59,396. Yep. So we need to reduce that. So we have here, and I'm actually going to do some math here at the bottom of the page. Ascertain's new capital. So we have old. That was for 59, oh, thank you, 396, which I just showed you right here. So, then we had a loss, and that loss was, where am I looking here? This $18,214, that's what she lost. So $18,214. And then she took out this $1,800 in cash. And now, I'm just going to add all this up here.
That would be 39,382.
39,300. Thank you. So I'm just going to highlight this. That this is her new balance here. And I'm just going to write that in the trial balance in 1 second here. Does this calculation make sense why we got this? Now I'm just going to quickly, before I do anything, because I know I'm going to forget and put the wrong number in the balance sheet, I'm just going to write in this 39,382. And you can see our new balance here, leaves that 1,800, 39,382. Let's come back in 5 minutes and then we'll do our balance sheet and call it a day.